Hello, hello, very good morning to all, and welcome back to today's Daily Dose of Market Insights. Kelvin here. Very good morning. Today will be the Wednesday, the 19th of November 2025. So, as usual, before we jump straight into the gist of our daily dose, which will cover the full suite that includes all the intraday technical outlook on all the broad-based cross asset classes that we cover on a frequent basis, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exit deposits. This presentation is for general information purposes and is not investment advice. Past information is not representative of future results. All right. So as usual, the big news or the big event that's taken shape yesterday is a continuation of that risk off in the major US stock indices. So let's take a look at what has taken shape over here in the US market overnight. So what we could see over here is that on my screen, we could see a throughout sell-off in the major US stock indices yesterday. So all of them are actually down except for the Russell 2000, which is pretty much interesting. So what I could see over here is the S&P 500 is down by negative 0.83%. The Nasdaq 100 is down by negative 1.2%. The Dow Jones Industrial Average is down by negative 1.07%. But however, the Russell 2000 managed to inch a small gain of 0.31% yesterday, as it managed to stage a rally after hitting an intraday low at around the 12 a.m. mark yesterday. So what I could see over here is that there is some form of support that is coming into the most risky spectrum of the US stock market. That means if I use that the Russell 2000 being the most risky spectrum of the US stock market. Why? Because these are smaller caps company, which has a much more highly levered balance sheet or highly we call gearing in their balance sheet as compared to those larger and mid caps company in the S&P 500 and in the Nasdaq 100. So what we could see is that it hasn't reached to a stage of a systematic sell-off yet, despite the weakness that we see in the US stock market that has taken shape 1.5 weeks ago. With the consolidation, given the fact that the riskiest side of the spectrum of the US stock market, which is the Russell 2000 small cap benchmark stock indices, managed to stage a recovery yesterday. So the culprit of what causes the indiscriminating sell-off in the larger cap US benchmark stock indices is centered on AI valuation fears. So yesterday, we do have one of the CEO of the mega cap giant, which is Alphabet. So which is i.e. The parent company of Google. So Alphabet, Google, we use it in the same synchronization. So the CEO of Alphabet, which is the parent company of Google, said he mentioned that no company would remain unscattered if the artificial intelligence boom collapses. So this comes amid a high valuation and heavy investment fueling concern of a bubble. And he also acknowledged that the current wave of AI investment was an extraordinary moment, but acknowledged elements of irrationality in the market. So that actually kind of have a echo the warning of irrational exuberance during the dot-com era. So based on his negative, we call it remarks, that also add weight to this indiscriminating, we call it sell-off that has taken shape yesterday, starting from the larger mega cap technology stocks, spreading into the entire S&P 500 and the Nasdaq 100. So if you look at the heat map of the S&P 500, there are more rates over here, and the deeper the rate will be in Nvidia. So I'll share the stock price of Nvidia, which is very important because Nvidia has a significant impact on the broader larger benchmark stock indices like the S&P 500 and the Nasdaq 100. That being said, because Nasdaq 100, the Nvidia is the largest, biggest market cap stocks inside S&P 500 and the Nasdaq 100, and the Nvidia is also the biggest leading general that is driving this AI optimism rally in the US stock market and as well as globally since 2 years ago. So later I'll share you the price of Nvidia, and from Nvidia we are able to take a look whether the S&P 500 is still holding on to critical support level, followed by the Nasdaq 100. All right, so if you look at the groups from the grouping by breaking down on the 11 sector, not all of them are in the red. So for sure, the technology and the consumer cyclical are the worst hit, but being the fact that consumer cyclical also consists of one of the mega cap technology stocks, which is Amazon, which was hit badly as well yesterday. So the defensive sector managed to help the fort yesterday. Energy, healthcare, real estate will be consist of the REITs stocks that is being listed in the US S&P 500. So all of them are up by 0.6%, 0.4%, and 0.28%, inching on to positive gain in a slew of red within the S&P 500 component stocks over here. And what's interesting over here is that despite this time around the sell-off in the S&P 500, or i.e. the S&P 500 and the Nasdaq 100 and the Dow Jones Industrial Average yesterday, it didn't create a negative feedback loop into the Asia stock market today. So what do I mean by this? So if you look at the Asia stock market, the Nikkei 225 managed to recover at trading up 0.8% right now. All right, since hitting a intraday low today at 8 a.m. Singapore time, and it starts to trade near the session high as we are speaking. And the Hang Seng Index is being open about 1.5 hour ago. It's now trading almost unchanged. And if you go to the CSI 300, which is the benchmark A shares stock index that comprises the larger cap China A shares stocks listed both on the Shenzhen and Shanghai exchange, is up by 0.6%. And we're going down to Southeast Asia. Our STI is up. The Singapore Straits Times Index is up marginally at 0.10% over here. And the rest of the other Asia stock market, like the KLCI, the Indonesia benchmark stock index, the IDX 30, the set is up 0.14% and 0.41% respectively. And the Australia ASX 200 is almost trading unchanged right now. So what I could see over here is the negative feedback loop on the sell-off in the AI related US larger cap stocks didn't create a negative feedback loop today into the Asia Pacific benchmark stock indices, which is, in my view, it hasn't triggered off a systematic pronounced sell-off at this juncture. Okay, so now up next will be in the FX market over here. So FX market is rather choppy. So we know that yesterday there's actually a meeting between Bank of Japan Governor Uda and the and the new Japanese Prime Minister Takashi. And this is a routine meeting, but because given the current context is rather important, because market participants will view this meeting whether a Bank of Japan Governor will bow down to the current political leadership in Japan, where the new Prime Minister Takashi, she is a protege of the previous late Prime Minister Abe, who she endorsed, and Takashi is also a very strong, we call it, advocate of accommodative monetary policy in Japan. That means, i.e., wanting the Bank of Japan to revert back to what I call 0% interest rate again. But however, after the meetup with meetup between BOJ Governor Uda and Prime Minister Takashi, there's a kind of we call it not really a press conference, but Uda commended to various media outlets after the meetup, and he mentioned that he told the new Prime Minister Takashi that the Bank of Japan is still in the process of slowly dialing back its easing support for the economy, signaling his unshaken intention to carefully rise interest rates. So that means, i.e., based on this remark that he's made to media outlets after the meetup with the new PM, Bank of Japan Governor, he's still following his stance of gradually increasing interest rate in Japan. So keeping hopes that the Bank of Japan will still be on the path of rising rates, but on a gradual approach rather than reverting back to its decade plus of ultra easy monetary policy. So that causes the choppy movement in the FX market yesterday, especially on the dollar yen. So what I could see over here is that the dollar yen initially it spiked up. Then after that, right now it's trading down over here. So this is a 5-day rolling performance. So if you look at the 1-day rolling performance, the dollar yen is actually the weakest major currency as we are. The dollar is the how is it put away that the dollar is trading the weakest against the yen right now as we are speaking, based on a 1-day rolling performance. That means taking into account the last 24 hours price movement. The dollar yen is actually down by negative 0.13% at the bottom of the spectrum, whereas the rest are kind of trading sideways, and the dollar is the strongest against the kiwi at 0.45%. So if you look at the US dollar index over here, so the US dollar index, yes, it managed to bounce off from our support level that we mentioned earlier on at 99.25, which is very close to the 20-day moving average. But however, yesterday's price action, it formed a kind of a very small little body candlestick, quite a spinning top, indicating a hesitation by the bulls. As yes, even though price action managed to survive in the last 2 days on last 2 sessions on Friday and Monday at 99.25. So at the top of it, we still have a rather significant medium-term resistance zone, which is at 100.10 and 100.54 over here, which confluence with the medium-term swing high of 29th of May this year and 1st of August, and so confluence with the key 200-day moving average as well. So this is the US dollar index. So what I could see over here is that from a technical perspective, since its low of 1st of July 2025, it's been trading in the rather choppy sideways range configuration at this juncture. All right, so that's for the FX market. And if you look at the gold price over here, so given that the gold market continues to remain lackluster over here, so I could see over here is that gold price trying to actually trade around the 20-day moving average. Okay, at this point in time, so that I'll share with you what are the key levels to look out for gold. All right, so it's rather it's still holding above the 20-day moving average over here, but can't break above the 4,208, where Friday it did a bearish reversal. Okay, at this juncture. Okay, so now with that covers the first segment of the daily dose. So let us now move on to the second segment, which I will touch on more on the intraday technical outlook on all the broad-based cross asset classes. But before that, let me expand my screen so that you guys could take a look at the charts. All right. So now with that, I think the screen is good over here. All right, so I think all is good. Okay, so give me 1 second just to make check. Okay, should be fine. All right. Okay, now let's start with the FX market. Okay, very quickly. Okay, I think the chart is good. Yeah. All right. Let me start with the euro dollar. All right. So the euro dollar also continues to play around the 20-day moving average after that initial dip at the start of this week, holding above our 2 key short-term support level at 115.60, followed by 115.30, which I highlighted in my chart of the day yesterday. So what we could see is that the hourly RSI continues to be held by this parallel ascending trend line support level. All right, indicating the lack of downside momentum. So with that, the 2 key support level will still remains unchanged for today. 115.60 will be my first support level to watch. The pivotal support level, short-term pivotal support, remains at 115.30, which is the 61.8% Fibo retracement, the golden ratio of that previous minor recovery from 5th of November low all the way up to the recent high of last Friday. Right, so this is still close to the golden ratio at 61.8%. So I'll just leave the levels the same. Given the fact that the hourly RSI continues to remain on support, we will still maintain that bullish bias, but price action got to break fast above the first intermediate resistance at 116.15, where price action almost tested it yesterday during the start of the US session at 116.15, where it printed intraday high of 116.08. All right, so a clearance above 116.15 will increase the probability of a further potential up move to retest the 50-day moving average, acting as the next intermediate resistance at 116.50, 116.60 in the first step. Only a bearish breakdown below 115.30 will negate this intraday potential recovery view to see a further slide towards the next near-term support level at 114.95, followed by 114.75, which is the minor swing low of 5th of November. Okay, then for the sterling dollar, the sterling dollar has now starts to be trapped in a sideways range, but still can't break above the upper limit of this descending channel resistance that has been in place since the high of 18th of September, and as well as the 20-day moving average. So I will flip to a neutrality stance for today, neutral between 132.15, which is very close to the upper limit of this descending channel, and so confluence with the minor swing high of last Friday, 14th of November. Lower limit will be the key range support level that the sterling dollar has been in play since 7th of November. So this is something like a minor range configuration. So the lower limit of the range will be at 130.95. So neutral between 132.15 and 130.95 level for now. Only a breakdown below 130.95 may see further weakness to retest the 5th of November minor swing low area at 130.15 / 1.2990, which is the one-time Fibo extension of the previous down move from 17th of September to 14th of October, projected to the minor swing high of 17th October during the start of the European session, and as well as the minor congestion area over here of 3rd of April and 11th of April this year. Okay, so that's for the sterling pound over here very quickly. So neutral between 132.15 and 130.95 for now. Onward next will be the Asia Pacific currency against the dollar, starting with the Aussie dollar. So Aussie dollar yesterday, we do mention that it's fast approaching the 200-day moving average, pardon me, where we flip to a potential minor recovery scenario using 64.67 as my short-term pivotal support level. Indeed, price action did bounce from here, but can't surpass above the intermediate resistance zone of 65.25 / 65.40. So with that, given the fact that it continues to hold above the 64.67 level, so I'll still maintain that amount bullish bias over here for a potential move up towards the first resistance zone at 65.25 / 65.40, as long as 64.67 holds over here. Only a breakout above 65.40 potentially seek a retest at the next intermediate resistance level at 65.60, which confluence with the 50-day moving average. However, a bearish breakdown below 64.67 will invalidate this potential minor recovery view to seek out a further slide to retest the medium-term pivotal support zone at 64.64 / 64.30, which is the minor swing low of 14th of April, and as well as the expanding wedge range support that has been in play since 23rd of April 2025 low. All right, this gray line over here. So that's for the Aussie dollar. Next up will be the dollar yen. So dollar yen continues to remains rather choppy. So yesterday it broke above the 155.30 level, but can't maintain that momentum and starts to retest this level again. And the hourly RSI continues to shape this bearish divergence. All right, over here. So given the lack of upside momentum and the potential reintegration back below 155.30 level, and we will be neutral for today, neutral between 154.85, which was the Asia session low yesterday before the before the meeting that takes shape between Bank of Japan Governor Uda and the new Prime Minister Takachi. So that will be the minor swing low that is being formed during the Asia session before the meetup yesterday. So neutral between 154.85 and 155.80 / 155.95. So that's the 3rd of February 2025 high area. So however, if price action starts to do a breakdown below 154.85, then potential that could reinstate that minor bearish reversal view for it to actually inch downward lower towards 154.20. A breakdown below 154.20 may expose 153.65 next, which confluence with the rising 20-day moving average that that confluence with the minor swing low of 11th of November and 14th of November. So that's for the dollar yen. Right, next up will be the stock indices, the major stock indices. Let me start off with the Asia Pacific. Oops, sorry, the Asia Pacific stock indices, which is the Hong Kong 33, representing the Hang Seng Index. So the Hong Kong 33, yes, it broke down below our short-term pivotal support that we highlighted on Monday at 26,045, inching upwards towards the next support level at 25,760, which is also the lower limit of this ascending channel that I drew from the low of 10th of October. So with that, I will have a neutrality stance for now. So neutral between 25,760 and 26,045 over here. So however, if we start to see a further bearish breakdown below 25,760, then potentially price action will start to revisit the swing low area of 10th of October and 17th of October. In first step, 25,550, breakdown below it exposes 25,180. Next, only a price action breakout above 26,045 will negate this short-term choppy movement to see a potential push up to revisit 26,310, which confluence with the 20-day and the 50-day moving average as well. So for sure, if price action we want to see a more substantial recovery towards the upper limit of this ascending channel that is still holding, it got to have clearly break above the 20 and the 50-day moving at the 20 and the 50-day moving averages that is confluencing at the next key intermediate resistance level at 26,310. So that's for the Hong Kong 33. Next up will be the Japan 225, representing the Nikkei 225. So it managed to bounce off from our medium-term pivotal support that we highlighted previously, and so very confluencing very closely with the rising 50-day moving average as well. So price action is still holding above some key technical support level and technical elements for the Japan 225. And what we could see now is the hourly RSI has started to shape a bullish divergence, where price action on the hourly RSI stage a higher low, and we start to see similar low on the raw price action of the Japan 225, indicating the ease off of that bearish momentum. So with that, using 48,450, which is our medium-term pivotal support level, we will have a bearish bias for a potential minor bullish reversal scenario that may take hold today on the Japan 225. First resistance to clear will be at 49,370, which is the former minor swing low of 7th of November. A clearance above it potentially seek out a retest at the minor swing high area of 14th of November, which was last Friday, also confluencing with the 20-day moving average at 50,730. So a breakout above 50,730 potentially see a much more pronounced recovery and increase the odds of a new bullish impulsive up move sequence. However, a price breakdown below 48,450 will negate this potential minor bullish reversal scenario to see a further slide towards 47,780. So 47,780 will be the medium-term ascending channel support that is in place since the low of 7th April. A breakdown below it potentially see much more we call it a multi-week corrective decline that may unfold, exposing the next support level at 46,910 in the first step, which is the minor swing low area of 15th of October and 17th of October. So that's for the Japan 225. Next up will be one of the weakest major stock indices, which is the Germany 30, clearly breaking above the 200-day moving average over here. So the Germany 30 are going to respect the price action, given if you look at the daily time frame over here. So previously, we have a view that it may still be oscillating within this potential medium-term multi-month ascending triangle range configuration, where I link up the lows from 19th of June, 17th of September, and similar high at the current all-time high area that was printed of 9th of October. But yesterday, it managed to have a daily close below this key ascending triangle range support level, and so broken down clearly a daily close below the 200-day moving average, so indicating that we may kickstart a medium-term corrective decline phase for the Germany 30, which I got to respect the current price action. So with that breakdown of this technical we call it elements and technical levels yesterday, we will flip to a bearish bias for today on the Germany 30, given that key support level has been taken has been broken down on the downside. So with that, the pullback support level of this former ascending triangle range support at the 200-day moving average will form my key pivotal resistance for today at 23,450. 23,450. First resistance level will be the initial bounce that where price momentum can maintain during the US session at 23,300. So flip to a bearish bias using 23,450 as my short-term pivotal resistance level. Next two support level to watch on the near-term basis or the intraday basis will be at 23,030, which is the minor swing low of 19th of June. A breakdown below this level potentially takes us down lower towards 22,780 in the first step. Graphically will be this minor congestion area of 11th of March and 27th of March this year. And if you were to do the Fibo extension on the downside, taken from the current down move, okay, from the minor swing high of 13th of November, okay, that constitute very closely with the 0.236 right level. Okay, so that's for the Germany 30. So only breakout above the or reintegration back above the 200-day moving average, which is the 23,450 short-term pivotal resistance, that would invalidate the bearish bias view to see a squeeze up towards 23,665. A breakout above 23,665 will see a further push up towards the intersection point between the 20 and the 50-day moving average, confluencing as the next intermediate resistance level at 23,960 level over here. All right, so that's for the Germany 30. So now before we jump straight into the US, before we jump straight, okay, where is it? Into the intraday technical outlook of the three major US stock indices, let me touch on the technical chart of Nvidia, which is very important. Why? Like I say at the start of my daily dose, Nvidia is the biggest market cap of S&P 500 and the Nasdaq 100, and also the AI juggernaut that is driving this AI optimism rally for the US stock market in the last 2 years. So if you look at the chart of Nvidia, the technical chart of the Nvidia is still hovering at a medium-term pivotal support level or medium-term pivotal support zone at 183.30. This is the daily chart of Nvidia. So very quickly, and we know that Nvidia also faces a key risk event today after the close of the US session, which is at 20th of November, 4:01 a.m. Singapore time, where Nvidia will release its earnings results, its Q3 earnings results. So what you could see is that Nvidia continues to be, yes, yesterday there was a sell-off, but this sell-off managed to form a small little spinning top body candle. So yes, it's a bearish candle, but this bearish candle body is rather small, so indicating also a lack of downside momentum by the price action movement of the depicted by the end of the US session yesterday. So it managed to help right above, right at the lower limit of this minor ascending channel that I drew from the low of 5th of September, and also this key congestion area here previously was resistance break, formed into a pullback support before hitting a fresh all-time high on the one and a half months back ago on 28th of October, about 1 month ago on 28th of October. So that being said, that Nvidia still remains on support 183.30/177.70, 183.30/177.70. I will not be so I don't have a high conviction to flip to a bearish bias for today for the major US stock indices. All right, so with that, I will have a neutrality stance instead. So let's flip back to the intraday technical outlook on the major US stock indices. All right, starting with the US Wall Street 30 over here. So the US 130 yesterday broke down below our key support level, which we highlighted yesterday, which is also the 50-day moving average, and as well as the lower limit of this minor ascending channel, now turns into a pullback resistance. But then what's interesting over here is that even though Nvidia has a significant reflexivity, a feedback loop impact on the state of the US stock market sentiment, individually, the US Wall Street 30 representing the Dow Jones Industrial Average, the hourly momentum also has started to shape a bullish divergence. Lower low in raw price action, but the hourly RSI shape a higher low over here, which is indicating the lack of downside momentum yesterday. So given this individual bullish momentum that's being seen on the hourly RSI of the US Wall Street 30, and taking into account of the intermarket relationship that Nvidia has on the broader market, where Nvidia stock is still holding at its key medium-term pivotal support level, which I highlighted earlier. I will flip to a neutrality stance for today. So neutral between yesterday key support level, that will be the upper limit, 46,740 slash 46,575. Yesterday minus swing low will be my lower limit of my neutrality zone, 45,965. So only a bullish breakout above 46,575 will reinstate that potential recovery scenario for the Dow Jones Industrial Average towards 47,020, 47,330 slash 47,500 next. So that's for the Dow Jones Industrial Average, which is the Wall Street 30, pardon me. Next up will be the S&P 500 over here. So the S&P 500 also broke down below our key support level yesterday at 6,675, pardon me, over here. So similar as well, our hourly RSI on the SPX 500 also shaped that bullish divergence. So with that, we also have a neutrality stance on the SPX 500. So neutral between 6,675 and 6,590. So price action got to faster breakout above 6,675 to negate this negativity or the bearish sentiment on the SPX 500 to potentially reinstate that minor bullish reversal scenario to revisit 6,720, followed by 6,780 in the first step on the SPX 500. So neutral for now between 6,675 and 6,590 on the SPX 500. Then next up will be the Nasdaq 100 over here. So the Nasdaq 100 also broke down below the 50-day moving average yesterday after a choppy movement at 24,009. Previously, we have this key support level at this 24,600 level over here. Okay, so also what's interesting over here is that the Nasdaq 100 also starts to shape this bullish divergence as well. So neutral between this 24,270 level, very close to yesterday minus swing low, which is in fact the minus swing low of 14th of October and 17th of October over here. And given this bullish divergence that has being formed, and as well as the Nvidia that's still holding above its key medium-term pivotal support level. So neutral between 24,940 and 24,270 on the Nasdaq 100. So Nasdaq 100 got to break above fast on the upper neutrality limit, which confluence with the 50-day moving average right now at 24,940 level. A breakout above 24,940 level will kind of reinstate a higher probability minor bullish reversal scenario to revisit 25,290 slash 25,430 next, which is the 20-day moving average. I think as a next intermediate resistance at 25,430 as well. So that will be the two key support level to watch out for today, 24,940 and 24,270 on the Nasdaq 100 as we flip to a neutrality stance for now. So that sum up the intraday technical outlook on the major global stock indices. So it's rather a mixed bag faction trading right now. So now with that, let us now proceed to the commodities market, starting with the gold XAU/USD. So for gold XAU/USD, the bounce that taken shape yesterday still remains lackluster. So what we could see is that the hourly RSI continues to remains on resistance, where yesterday it managed to reject off a key parallel descending trend line where the previous bearish divergence took shape. So, and we tightened our pivotal resistance yesterday towards 4,110. So still remains unchanged. So as long as 4,110 tightened short-term pivotal resistance is not surpassed to the upside, we'll still maintain that bearish bias view for a potential slide on gold XAU/USD for the next intermediate support level that may come in at 3,980. A breakdown below 3,980 may see further potential weakness towards 3,895 slash 3,864 next, which is the minor swing low of 28th of October, where it kickstart this previously corrective rally that has taken shape from 28th of October low to 13th of November high. However, only a bullish breakout above 4,110 will invalidate today's bearish bias view to see a squeeze up in the first step towards 4,155, followed by 4,203 next. So that's for gold XAU/USD. So lastly will be the West Texas crude oil over here. So let me open up the chart of the West Texas crude oil. I think I accidentally closed the chart of the West Texas crude oil. Okay. Okay, so I could see over here is that the West Texas crude oil continues to trade in a sideways fashion, but still holding below our short-term pivotal resistance zone at 61.30/61.70, which is the rising 50-day moving average that managed to cap previous rebound since 24th of October this year. So with that being said, over here is that we'll still maintain that bearish bias within this minor sideways range configuration that has taken shape since the low of 13th of November. So first support level to watch out for will be at 60.50, where price actually managed to surpass yesterday and managed to minor bounce over here. So 60.40, pardon me, not 60.50. 60.40 will be my first support level. A breakdown below 60.40 may see further weakness to revisit the minor swing low of this Monday that managed to survive on Tuesday as well at 59.38. Okay, so let me put it in writing, 59.38. 59.38. Okay, so this is the two key support level to watch, 60.40 followed by 59.38 on the West Texas crude oil, maintaining that bearish bias within this complex minor sideways range configuration using the short-term pivotal resistance that remains the same at 61.30/61.70. So only a bullish breakout above 61.70 will invalidate this bearish bias view within this minor sideways range configuration to see a squeeze up to revisit the key intermediate swing high area of 24th of October at 63 figure level. All right, so that sum up all the intraday technical outlook on the global cross asset classes. So before we go, let's have a quick look at the economic calendar. What are the key data to look out for other than Nvidia earnings results today after the close of the US session? So in terms of key economic data, today will be the Wednesday over here, 19th of November. So as we head into the opening of the European session at 3 p.m. Singapore time, we will have the core inflation data coming out from UK that could impact the sterling pound and the sterling crosses. So for core inflation rate, market is expecting a slight dip to 3.4% year on year for the month of October from 3.5% print in the previous month of September. And as we head into the remaining part of the European session is rather quiet. So as the US session kickstart, we will have 11:30 p.m. We have the EIA weekly crude oil stockpile change, so that could potentially influence the intraday prices of the West Texas crude oil over here. Then thereafter will be the 3 a.m. mark over here. We have the FOMC minutes. So participants will be scrutinizing the debate among FOMC officials right now, which has now formed a rather balanced tonality based on their past public speeches, also reducing the rate cut bets to around less than 50% on this based on the CME Fed Watch 2 right now. The potential interest rate cut coming in on the 10th of December meeting that has been below 50% since the start of since last Friday. All right, so now it's hovering at 49%. So what we could see over here is that the rate cut bets has been down significantly as compared to 2 weeks ago and a month ago, where previously 1 month ago market 1 week ago, market is looking at a 67% chance, and a month ago, market participant is looking at almost a near certainty of 94% that the Fed will potentially do a third cut on the December meeting to bring it down to 3.5% to 3.75%. But right now, rate cut bet has been down due to the rather mixed messaging coming out from the public speeches of the Federal Reserve officials. So market participants will be scrutinizing the minutes upon the release of the minutes at 3 a.m. Singapore time. And During the same time, we have also another Federal Reserve official speaking. Fed William will be making a speech as well. And also before the start of our daily dose tomorrow at 9:15 a.m., we have the release of the decision making of PBOC on their 1-year loan prime rate and the 5-year loan prime rate. So market participants is expecting no change for this rate over here at 3% and 3.5% respectively. So back to the earnings calendar over here. So let's take. So other than Nvidia, there's actually two more earnings that we may start that may impact the market. Not really a top tier mega cap technology stocks over here, but that could actually indicate the health of the the health of the US consumer spending behavior. So let me share with you guys. Okay, put it 3-star. Okay, so we know that Nvidia will be the key risk event for the US stock market for today. So market is expecting we call it a rather high EPS earnings growth number, previously at 0.81 a year ago. Then market is expecting a further jump out in earnings growth, or the EPS number for Q3 at $1.20 over here. Right, so that will come in after the close of the US session for today. And before the start of the US session today, we have Target. So why Target is not really a mega cap stock? Why is it important? Because Target is considered as one of the major supermarket we call it chain in the US. So their earnings and revenue number will indicate the spending behavior or the health of the US consumer. So that could also significantly has an impact on the market, as well as market participants has dialed down their EPS to 1.77, $1.77, down from the previous quarter a year ago at 1.85. And they will release their earnings, Q3 earnings, before the start of the US session today. All right, so that sum up today's daily dose of market insights. I'm Kelvin here, signing off. I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.